All right, MMTs, this is what we were talking about, and Priceline did the same thing. Um, we finally hit a area of resistance on the Nasdaq 100 on a 3-minute level, and you can clearly see how these reversals and that these diamonds were working in a descending value, which would also support an intraday level on the call and put structure. So the 2450 put that was $16 has had its first markup day because they had taken it to such extreme levels that they had to bounce and mark it up. And the 3-week calendar process of today being 123 of 2012 of January, and that when reversals start to happen, that the fear factor in the VIX and the VXN had hit complacency factors. And when I show you the very same chart on a daily level outside of the 3-minute reversal, is that markets get top heavy and price diminishes at that exhaustion price high. So it's everything that I've tried to make very clear to everyone in pre-market this morning. And you can go to the pre-market analysis. Those are live videos with MMTs as to how the trade management would be for the day. Not only that, as to what you would be looking for on reversals, and that once you do make the key reversals, that every time you bounce, you're rolling over. But you had to have very big red bars like this to qualify. And you needed to see a lot of red bars like that in teeny reversal on Nasdaq 100. Because you have to be able to, here you had very big bars up, but on the way down, you have to have a lot of red ones to confirm it, and you have to go right through these last lows. And this is live right now. And that's that breakdown right now. So when you're looking at where that retracement value is going to be, you're going to have to start doing the math below the consolidation low of the breakout over here. From that point of that value to where that is, that would only be that much of a retracement. That's not very much at all. So that's the update here on your Nasdaq 100. Now, yeah, if there's a trade, you can talk, but MMTs, what I want to show in your system is where these delta exhaustions are. And that delta exhaustions can be verified through a step-by-step process. So I'm just going to show that this top up here on this daily is not populating correctly. Let me double check it. VIX.X, Market Volatility Index, CBOE. We would like to point out to you that the peak of the financial crisis, the fear factor was way up here. We had never seen that. Here was a 2011 high, so that fear of the European. I will break this down for the MMTs live here and now. And one of the key factors that we're going to look at here from this view is we know where those trend lines had come from. And what we're doing is that on a daily level, we are entering what we call, and here's the bottom of the base. Last time we had some fear, which was back over here. That fear went straight up and markets sold down, and then the fear had stayed elevated for a period of time over here. The 2011 part of this is right here, 2011 lows. And then we have we have made it lower to complacency levels where markets get complacencies, and it should start triggering sell transactions. It is 9:16 a.m. Pacific Standard Time, 1/23/2012. So what we're talking about clearly is that with this low fear level in the VIX, we'll take a look at the VXN, okay? And here we go. Now, this is a fear factor as well. And you can see here that we're approaching levels. And what does this equal? Nasdaq 100 volatility index, my friends. And the lower it is, the more complacent people are. Not only that, we would also like to share with you that these lows that are here were the same kind of lows. As you can see my pointer here, I'll put a trend tool for you, MMT, is these were consolidation lows back in 2011 in complacency that started to build when you were put in the market tops and when we called the tops in 2011 during that time frame. And that you also had a huge breakout in the fear factor, and we broke up and we made these highs up here, and they were exhausted with fear up here. And now that we're down here at the lows, there is no fear, MMTs, and we're down to these levels where breakout levels have occurred before on the VXN. If we break down into the lower channel and break below here, the lower that we go, the more complacent the market will be, and it's always ripe for perfect days like small pullbacks that we're having within the calendar 2012 that is started in a bull rally as of 1/23/2012 midday update. 12:18 a.m. Eastern Time, 9:18 a.m. Pacific Standard Time. So we've entered the first level of support at much lower fear factors right here starting the calendar year. Now, if you take a look here carefully, is that when I draw trend lines from here, that's that 35 area, when I simply come down here, what has to happen to validate a market reversal is you got to trade on the outside of this line, and then you have to start going up to areas like this. They are going to be short-term ranges between human behavior and emotions and everything else. They're very complacent. And that's when you would start to see profit taking take place. So it's very important to understand that part of it. When I take the peak high, the first high of 2011, and I come right over here, I can see that we could get down here where that trend line goes. Now, it's always possible when there is less fear. That would take us back to these levels, it looks like. So let's see if my trend line is correct. It's right below the market, and that would put us right back in these territory. So here's where it would put us. It would put us right back over here at these lows. That's where that lower trend line is. That's 14 and or 15.11, and here's 18.40. Here's a spread between here. But the thing that we want to be observant is we'll use our system and we'll look at the deltas, because whenever there's going to be a market change at levels like this, MMTs, is that it's very important for you to understand that the daily update that you see today would have to start tomorrow morning on calendar 1/24 of 2012 with the gap above these daily simple moving averages. So your range is going to be from this calendar 2012 low right here. So let's go find that one. And that's going to be this one. And that was 1897 on the VXN. And also on the fear indicator on the mid-morning update on the VIX, you hit a low of 17.22 today, but on Friday you did hit that low of 15.86 as a 120 calendar 2012 low on the market volatility index, CBOE. That's where we would look at trading those upper resistance levels, as we had talked about how the equities would put in their highs, and then what would end up happening is they would they would reverse from the top down. And like I said, it's mid-morning update. There's your initial low down $1.81. Those resistance levels in pre-market on 1/23/2012. Please go there and listen to the live pre-market futures analysis and updates. They're there. I'm going to conclude the fact that we're at complacent levels, and we'll be talking more about these charts that we just went over and what they mean as far as volatility goes, CBOE, VIX, and what the ranges of that volatility. Remember, volatility goes higher when people take profit and when people start saying, well, wait a minute. And generally, it's been my experience, it takes an event, and then once it gets going, it gets going. So right now, we're right down here at these major trend lines that we could go down to. And I'm just making that very clear, as the lower we go, that's when market pullbacks start to occur.